How's it going, traders? I hope you're all doing well. I hope you're all safe. I hope you're all healthy. And I hope you're having a fantastic trading year so far. Pips of Persia here. Similar to the previous video that we had for Euro Australian dollar, that we went through some key points when it comes to Wyckoff. Within kind of this video, my aim is to kind of go through, in essence, seeing the reaccumulation of price on a higher time frame, some institutional candles in the middle of a rally or a decline in price when it comes to certain trends. So we're going to speak about more than anything else punch candles, which is practically the same, an institutional candle within a very bullish or bearish range, okay, and entries based on structure and pool of money. Okay, we're gonna go through some very kind of key stuff in this video. So let's kind of give some very close attention to what's happening in terms of the structure for pound versus the US dollar. This is not in replay mode. This is the current market right now, and it's Thursday, 4th of June at 11 a.m. UK time. So yeah, paying a close attention to the structure points on the 4-hour time frame, the first thing I can see is we broke structure to the downside over there. Meaning what? Potentially, this can be a bearish trend. Potentially, this can make its way all the way down there. Okay? That's a complete possibility. However, having said that, for this move to the downside to happen, we need to understand that either the US dollar needs to gain a significant amount of strength or pound to lose a significant amount of strength. And when it comes to what's happening in the world currently, I don't personally see US dollar gaining a lot of strength until potentially, let's say, the second wave of this pandemic hits. And pound, there's no need for that to go down. If anything, more people are going back to work. There's going to be a lot more money in the economy. So if anything, we'll be looking at more of a bullish pound and a bearish US dollar. Why bearish US dollar? Because again, now that demand for US dollar as safe haven is not there anymore until we hit that second phase of the pandemic. Which is quite unfortunate, but most likely going to happen at the end of the day. That second wave of the pandemic, where probably lockdown is going to be much worse, and so on and so forth. Anyway, there's a lot of different things that can potentially happen. Let's not go down that route right now. Anyway, having a look at this final bit of structure over here for pound dollar, you can see that we are maintaining that perfect bullish structure over there, right? We've got a low, a high, higher low, higher high, higher low, higher high, potentially right now creating that higher low. Now, this may be where a lot of traders will get confused, right? Because you'll be looking at it and you'll be thinking to yourself, okay, we've got an imbalance over here, so potentially I'll be looking to trade this imbalance. You know, maybe imbalance fill to the upside, and then you look further down and you tell yourself, oh damn, you know, we've got a sell before buy candle over there, we've got an institutional candle over there, we've got an institutional candle over here. You know, on lower time frames you may find an institutional candle over there, so you may be asking yourself, which one of these entries do I go for? The honest answer is go for the most recent one. Okay, so based on kind of that mentality, and by the way, we don't enter blindly, we need to see more confirmations when the market comes within that range, right? So within that final uptrend over here, that final kind of move to the upside, if I look at this on lower time frame, chances are I'll be able to see something, you know, similar to this, okay? Blah de blah, doing this thing. So currently, my focus will be drawn to the final institutional candle, which is that one right over there. Okay, that bearish candle. That is that punch candle, that institutional candle in the middle of a bullish range. We have that one candle that stands out, one candle that if I put it in replay mode, chances are a lot of people were thinking, hey, that's the top of the market, that's the high of the market, you know. Even some traders who were trading maybe institutional, they might have been looking at, oh, you know, we just took liquidity and we're definitely looking to reverse, but that didn't happen. Or bearish engulfing, people who were looking at this as bearish engulfing and probably on lower time frames, you know, putting some type of a Fibonacci from that high to this low and want to trade it to the downside and so on and so forth, right? The bottom line is there were a lot of people who were looking to sell that, which means through kind of the next move to the upside that we had right over there, a lot of people probably got manipulated out of those positions, okay? So that leaves that institutional candle on the higher time frame for me to then be able to potentially work off. And now I can see that we traded in that region, the open price to the 50% of that, right over there, which is exactly where we want the market to reject, okay? So based on this, we are still maintaining that bullish structure and we're in great kind of areas for that bullish structure. There's a lot of money potentially sitting above these highs. So I wouldn't be surprised if this elongated bearish structure just reverses right now. You know, we continue to break those highs before we have that drop off, and that I spoke about a little bit earlier, right? So now I have that directional bias. I'll be looking for buy positions. I do not want to be part of the majority that probably, you know, maybe caught that high of the market over there looking to trade this to the downside, which I personally don't see happen, or whoever else who was, you know, potentially looking at that as a standard resistance area, selling to the downside, therefore selling to the downside. I feel like the majority will be looking for sell positions over here, so observing the masses and doing the opposite. Now, breaking this down on lower time frames, such as 15-minute, you know, 5-minute, 3-minute, 1-minute, you know, the type of time frames that we like to work on. What we have kind of created over here as well is kind of very simple. On lower time frames, on 1 minute, we had an accumulation of price over here, and the price has broken structure to the upside. So we've definitely got a break of structure over here, by the way. So how do we identify between a potential accumulation and a redistribution? Is that definite break of structure / manipulations in the other way, right? So if we have manipulated equal lows and potentially broke structure to the upside, then that's an accumulation cycle, right? And we've definitely manipulated lows, broken structure to the upside. So I'm good to go for those potential entries, right? Now, before we get into entries and, you know, potential stop loss and take profit, goes without saying, everything that I am kind of sharing in this video right now is my own personal kind of analysis, is for educational purposes only. This is not a, you know, trade idea. This is in no way me telling you this is how you have to trade or execute your own trades. No, it's just me speaking my mind. So do with that information as you wish at your own risk. These are concepts that you need to study a lot for you to then be able to kind of master them. But never risk more than what you're willing to lose, and grow your psychology as much as you are growing your skill set when it comes to kind of this industry. Anyway, going back to it, the key point of reference again within this structure is, okay, whatever price action, let's go through this again. Whatever price action we had down here was taken care of by that. Whatever price action we had over here was taken care of by that wick. Whatever price action over there we had was taken care of by that. I'm saying price action, but you know what I mean. I'm talking about imbalances, I'm talking about institutional candles and everything, right? So naturally, I know my entry should be kind of within this range, somewhere within here, okay? First thing that stands out to me is this 1 minute imbalance over here. This 1 minute imbalance that we have right over there. Let's have a look at this on lower time frames. I haven't personally yet. Yeah, we've got that same imbalance kind of on the 30-second time frame as well. So that's something that's really kind of standing out to me. We can potentially take entries based on that imbalance, but more than anything else, I was looking at that punch candle over there. Okay, that punch candle over there. We can take potentially entries at that 50%, have stops right over there. 3.6 stops, so this is a little bit more aggressive kind of entry and take profits above. Now, for the other entry that I have over here, I'm going based on that 5 minute institutional candle, which we have right over there. Okay, that 5 minute institutional candle, I've put my entry just at the high of that wick, just at that imbalance fill, stop loss at the same price, giving us a 6.3 pip stop over there, or a 3 pip stop over here, 3.6 pips. I personally do believe that we can actually bring this definitely lower, to a lower stop loss, to a much better kind of entry. But let's have a quick look on lower time frames. Our stop loss needs to be a little bit lower, by the way. A tad bit lower. Yeah, so let me just copy and paste the value of the stop loss over here. Make sure on both scenarios I've got the same stop. Yeah, for this on the 15-second time frame, that institutional candle over there is standing out to me. So I would be very, very kind of happy to take trades based on that, because now that's giving me a 1.5 pip stop. Okay. The second entries are the more safer ones up here. That stays the same. I'm not going to go ahead and change that. Oops. Does this rally matter? That rally doesn't really, well, now that we've created another punch candle over there on the 5 minutes, I can potentially look for entries based on that as well now. Okay, so again, same thing. Go always based on the recent one, and I'm glad that we that we caught this on on live, in essence, from when I'm recording it. But anyway, the take profits for that will be at the same place. So we'll be targeting those. Oh, we are targeting the 5 minute structure over there. That buy before sell under 5 minutes, right? We are targeting that for now, because there's a chance this market will rally up until then, clear some of these highs, clear some of these highs, react. So we've got equal highs over there, got equal highs over here. So we are trying to take that trade up to that level to clear all of these equal highs, and it may just react to that candle, which that gives us a 1 to 49 with the smaller scenario, smaller stop loss scenario. But if I look at the higher time frame structure, remember where we are targeting. We are targeting those 4-hour highs, right? So where are those 4-hour highs? I believe that's the line that I drew to identify those 4-hour highs. That's the sell scenario that I had based on that 5 minute, right? But before we even kind of get into that sell scenario, let's first adjust everything. Is that the right value for entry? Up here, right? So let me just adjust everything, put the TPs a little bit higher where we are targeting, so you know the final target risk to reward. We'll be looking at these highs over there. So for the smaller scenario, smaller stop loss scenario, I mean, we'll be looking at a 1 to 85 to those highs, right? And another 1 to 19 for the slightly bigger stop loss as well. Now, on the 5 minute time frame, oh, Mehdi, you know, we've taken off already. We have that institutional candle over there. Blah, blah, blah. What are you going to do now? How are you going to look at your entries? Let me just put this back where it was, 1.5. There we go. So another potential entry, it goes without saying, is indeed at that institutional candle with stop loss again at the lower the wick. Okay, take profits. I know where I'm targeting. I know where those first potential targets are. So that's still a 1 to 12 over there. And I haven't even, you know, broken this down on the lower time frame for me to be able to perfect that entry. So let's have a look. On the 15-second time frame, or 1 minute time frame. To be fair, I would keep the entries where it's at. I don't necessarily see a need to have more accurate entries right now. That's good enough. 4.5 pip stop, 1 to 12.5, and this will happen probably very rapid as well. So now the mentality behind it is this: I can take 1% risk over here, okay? And if this happens to take me out, then I've got other positions over here to make back those losses. Simple as that. So I can take my risk over here. If this happens to take me out, then I've got other positions over there. Alternatively, I would like to monitor this on the lower time frame when we do approach the levels that we discussed on the 5 minute time frame, right? The higher that wick, that imbalance close, right? I would like to monitor this on the lower time frames to see if we are coming down very impulsively, if we are creating some accumulation schematics over there. If not, obviously I would not enter. Now those sell scenarios over there that we talked about on the 5 minute time frame to clear all of those highs and react to that institutional candle, those sell scenarios do stand. But once we come into that level, remember what we always look for. What time of day is it? Are we during London or New York session trading that? Number two, are we going up impulsively, reaching that level with a lot of kind of strength, because I don't want to sell against the dominant energy if the dominant energy is buys, right? Following that, am I getting some type of distribution schematics, right? Goes without saying, if this comes up here very impulsively, I will not be looking to sell this. Alternatively, as it comes up on the lower time frames, I need to start to see sideways. I need to start to be able to identify those distribution schematics, divergence, whatever you want to look at, for me to then look to sell this at the downside. If we don't get any type of distribution schematics, or on the other hand, if we get reaccumulation, how would I know this? How would I know it's a reaccumulation? As we start to create those distribution schematics, within a reaccumulation, you'll start to manipulate those lows and break the structure to the upside, right? So that's how I'll know that, you know, we're looking at that reaccumulation to the upside. So if I get something like that, then obviously I'm not going to be closing the buy positions. I'll keep them open, I'll keep them running, and those sell positions I will not enter. Very simple, very straightforward, right? Just letting the market tell me what it's ready to do. Same thing over here as well. You may be telling yourself, maybe you've got 3 different entries. One of them's ought to go right, and that's the exact point, right? It's not as if I'm going to be entering all 3 of them. And even if I do, if I enter all 3 of them, and 2 of them hit stop loss, one of them will definitely cover the losses. But that's not even the point. That's not even what we are trying to achieve over here. What I'm trying to do is I'm trying to wait for the market to reach the first desired level and then monitor that on the lower time frames. Am I getting accumulation schematics over here? Or, on the other hand, am I potentially getting, let's say, some type of a redistribution as I approach that zone? Manipulation of, you know, some type of highs to the upside, break of structure to the downside completely. Am I getting a redistribution? Because if I am, then obviously I will not be looking to buy it at these levels, and I'll wait for those lower targets to be hit. But as of now, we'll just keep an eye on the market. Although we are definitely very, very, very close to it, I can still put some type of an alert. If I happen to go away from my laptop for a bit, I can keep an eye on it. But I will definitely update you all on these 3 scenarios. I'm going to stop recording very soon, and then another video will be recorded for the updates. I'll put both of them together and upload it. So if you're seeing this now on YouTube, then let me know your thoughts on this analysis. Let me know if this is something completely new to you, or this is something that you're studying right now, something that you enjoy, and if you would like more content like this in essence. But yeah, let me stop the recording now, and then we'll come back with the updates.
"2,000 years later."
What's good, familiar? I hope everyone is doing well. I hope everyone is safe and healthy wherever you are around the world. So we're back with part 2 of this pound versus US dollar trade scenario. This is in replay mode right now. It's on a different broker feed than that I analyzed, you know, in the previous kind of section of this video. It's on forex.com. We were on FXCM. I'll go to FXCM in a little bit. All the analysis is still there. But this is what we were kind of looking at in the previous video. If you remember, we were speaking about that final H4 structure, that we have a very clear bullish momentum over there, and we have officially traded into that last punch candle, the open price to the 50% region. So we were looking for those buy positions to the upside, and the final targets that we were speaking about was at / above these highs. So we were looking to take some nice buy opportunities to the upside. Now, going back to the FXCM data feed, we had 3 or 4 different scenarios. 3 entries for 3 entries for the buy positions, as far as I remember, and we had a sell entry as well. The first entry that we were looking at for those buy orders, if I'm not mistaken, it was based on the 1-minute punch candle. I'm gonna go kind of back quite a bit, actually. Let's go back to where it was that we took off all of a sudden. Yeah, around there. That's it. So At this general point, we were speaking about how we are more kind of bullish on pound US dollar versus it being bearish, and the reasoning behind that, even though on the 4-hour time frame we spoke about this potential bearish structure, we also did say that we are more bullish on the pound and bearish on the US dollar because ease of lockdown around the world. That potentially means US dollar is not a safe haven kind of currency anymore. Investors are not really going to have their money in US dollar when businesses are reopening right now. So a little bit of a bearish US dollar, and on top of that, everyone who's going back to work here in the UK at the end of the day is going to help the economy. So hence the bearish pound, which is kind of the scenario that we went based on. To target those highs rather than take trades to the downside. And on top of that, I believe a lot of people might have thought that we're already within those premium prices for pound, so they were looking to kind of short sell it. We spoke about observing the masses and doing the opposite. So going back to that 5 minute kind of entry, this was the first scenario that we had. Just before this video, I showed these two pictures that we took exactly when the market approached those 5 minute kind of entries, right? So on the 5 minute time frame, this was taken on June the 4th at 11:47 a.m. UK time. So we were, if I'm not mistaken, 11:47, right over there. So right before we got this move to the downside over there, that's the 11:45 candle. So if I go down to the 1 minute time frame, 11:45, 11:46, and that was 11:47. Yeah, that's it. 11:46, 11:47. So we were already, the momentum was already to the downside as we were kind of taking that picture, just about taking that picture, just because right after we did, the market did indeed give us that sharp drop to the downside. The 1 minute picture was taken at 11:46.56. So just before that 11:47 candle, just before this candle was formed. So this is exactly what I was seeing on the 1 minute time frame when I was just about to say, okay, am I going to enter this trade or not? But based on kind of what I showed previously as well, these pictures were taken at that exact time of me deciding whether I want to take these trades or not. And this indeed was a no trade. So no one should have, in essence, entered this because we didn't have those accumulation signs. We didn't have those kind of signals telling us that this is about to go up. If anything, we declined straight away, took that out. So that was a no trade. That was a scenario that we did not enter. Yes, later on, this ended up reversing and going a little bit higher, but that was, again, besides the point. That was a no trade over there. Let's put it back in replay mode over there. So I'm just going to remove all of those from there. We still, let me remove this alert over here as well. We still had the two other scenarios we were looking at for those buy positions for pound dollar. And we had a sell scenario, which was based on that 5 minute candle. Yet again, that sell scenario was a no trade. So we'll speak about it once we kind of approach that zone, but we didn't get any type of distribution. We had such an impulsive bullish price action bringing us into that zone that we didn't enter any sell positions over there. But let's drop down to the 1 minute time frame. We actually identified this 1 minute structure over there, that 1 minute imbalance just above that 1 minute punch candle, and we spoke about taking some entries at that level. As it turns out, that would have been the best place to take those entries with those, as far as I remember, it was something like 3.5 pips stops. Let's say 4 pips, right? That would have indeed been the best place to take those entries, and we were targeting those 4-hour highs all the way up there, if you remember. Having said that, we didn't really have a defined risk to reward for that area just yet. I ended up taking that off the table to say, okay, I'm either going to be going based on above that area and keep my stop loss a little bit bigger because I didn't want to miss out on that trade. Or if we happen to come a little bit lower, then we'll take those aggressive re-entries, that 1 to 85 trade. Now, what ended up happening is we come down and we activate these trade scenarios over here, that trade scenario, the 1 to 18 that we spoke about. What was this based on? This was based on that 5 minute institutional candle right over there. that 5-minute institutional candle, 5-minute punch candle, 5-minute slowdown in price, whatever you want to call it. The entries were based on that candle, the open price, or just above the wick as far as I remember, with stops at that low. So that in total for that position gave us a 6.5 pip stop with a 1 to 18 risk to reward. Unfortunately, it didn't come down to activate that 1 to 85 over there. It just started to take off kind of without us. But it is what it is. Those, let me actually put this back, those best kind of entry options would have actually been at that imbalance close on that 1-minute time frame. So that would have indeed been those best entries. Now, again, these videos, I record them just to kind of speak a little bit about case studies and how, you know, you are able to look at other re-entries once something like this happens. Right now, we've, you know, that trade has been executed. You know, we are looking to go up. So if you're kind of in the similar scenario, then why is my trading view not working? Then the question is, how can you put yourself in the position to look for potential re-entry options, right? If this wants to work, let me just refresh it quickly. Okay, so how will you be able to kind of look at re-entry options? Let me zoom out a little bit. Okay, now once we came into that level, into that initial level, let me get rid of that. And we don't need this anymore either. Let's get rid of all of these unnecessary lines on the chart. We don't also need that 4-hour move. We already know that we've rejected. Targets, I know that as well. Okay, so that's all we need right now. Once we kind of came into that level and rejected that desired entry price, okay, pay close attention to what always kind of happens on lower time frames, on 1 minute, on 15 seconds, once we kind of come within those areas, because those are important, you know, time frames for you to then be able to say to yourself, hey, am I going to go for some re-entry options, or am I not going to be taking some re-entry options, right? I'm trying to put my finger on exactly kind of what time frame this was that we were looking at, but check this out. On the 15-second time frame, when you look at what happened just before we came into that entry price, which was, let me make it a little bit easier to see, which was that line right over there. Before we came into that level, what did we do? We created equal lows. We manipulated those lows to the downside, sign of accumulation, and broke that structure to the upside. Again, these are all signs of accumulation, so I knew that I was on the right side of the trade. This is where I can now be looking for those potential re-entry options, being, as an example, that imbalance region over there. So you may have told yourself, hey, I'm going to take some entries based on that imbalance, put your stops at the low, another 6.6 stop, and you have your targets well defined. So that would have been able to give you another 1 to 18 over there as well. Okay? But at this point, you've managed your risk properly. You're going in with 2 potentially 1 to 18 scenarios, if that makes sense, right? So that was the initial trade over there. You would have taken some heat, but yet again, when we're looking at these kind of tiny stop losses and fantastic risk reward ratios, I don't mind that little bit of drawdown. Now, as we come up, remember that 5-minute structure still stands for those sell positions. That was still a scenario that I gave out earlier. So now we want to see if that would have been a trade scenario or not, because that definitely wasn't a scenario that I sold it at, and this is exactly why. How we approach that zone, for me, was everything. I can see that on the 5-minute time frame, we came into that level extremely impulsively. And what do I always speak about? I don't want to go against the dominant energy to this extent. Yes, I've seen sometimes we have those impulsive moves and we have the rejection there and then, but believe me, I've seen a lot more when we get those impulsive moves to our desired entry region and it continues in the direction that it shouldn't have, right? And it keeps going in that direction that, you know, it shouldn't have. So that was a no trade there and then. Yet again, where are my distribution signals? There is none. There is literally nothing telling me that we are distributing. We had reaccumulation over here, some type of reaccumulation anyway, and we continue the price higher. There is literally nothing telling me that we are distributing on whatever time frame I want to look at. Zero, nada. We keep breaking highs and keep going, right? So it goes without saying, why this was such an easy decision to not enter those sell positions. So those sell positions were also invalidated. They should not have been entered. We always, always, always go based on what the market gives us. And the rest of it was literally just letting this play out. Letting this do its thing all the way up to those take profits and higher. So those 4-hour targets that we actually had, let me just take this completely out of the replay mode. So these were the sell positions that we were looking at, which was a no trade, gone. Those 4-hour structure, that 4-hour structure, those 4 hours highs that we were looking at, we just got the manipulation of the highs. And I did say, after we manipulate those highs, you can start to look for some type of a bearish momentum, but that doesn't necessarily mean we're going to reverse right here, right now. Still need to give the market more time, okay? But that would have been where you would have been kind of finalizing on those TPs, 1 to 18, done, dusted, near enough for 1 to 19. If you held it for a little bit longer, then you would have been looking at much better kind of risk rewards. But that's it. That's fantastic risk reward in essence. You know, there and then for us. We don't even need to keep pushing for those to take a lot more trades during the week. One trade like this, one trade like Euro AUD, that's enough. That's more than enough for 1 week of trading, you know. Now, let me just quickly have a look at the notes to see if I've missed anything. We spoke about pound-dollar accumulation on the 1 minute time frame as well, as far as I remember. So when we came into that 4-hour bit of structure over there, before we even kind of went to execute those buy orders, we were looking at the 1 minute accumulation for GU. Now I'm struggling to find where it was. Okay, so what you didn't see in the middle over there, what I had to crop out, was a good few minutes of me trying to find that 1 minute accumulation that we spoke about. Trying to go back on the charts, keep it in replay mode, having to keep refreshing trading view, unfortunately, but we got there in the end. So the 1 minute accumulation that we were speaking about for pound versus US dollar is the accumulation that took place as we approached that 4-hour zone, that 4-hour punch candle that we were looking at. So going from all of these lower lows and lower lows, lower lows, lower lows to now creating those higher lows and higher lows and higher lows, right? Which is kind of a very clear sign for us that we are within that accumulation. And not only that, what else do we look at when it comes to you know, some type of an accumulation? We were looking at this break of structure to the upside and manipulation of the lows to the downside. Again, remember we were speaking about whatever price action, whatever institutional candle or imbalance we had over there was taken care of by that candle, by that wick. Whatever we had over here was taken care of by that wick. Whatever we had here was taken care of by that wick, so on and so forth, right? So that naturally only left open that 5-minute candle that we were going based on, okay? Because we didn't take care of that area over there. So that was the accumulation that we were speaking about as well. This was an amazing kind of trading opportunity. Let me know if you know, this was a trade that you caught as well. Let me know what you think of this type of analysis, if you agree, if you disagree with certain concepts that we have kind of shared over here. And yeah, if you have any questions, anything that is on your mind, feel free to contact me on my Instagram at PipsOfPersia. Send me example of, you know, trades that you find that are similar, similar to, you know, what we showed here today. But definitely do get in contact with me if you have any questions, if you want to share any kind of similar trade setups or whatever it may be. I'll be more than happy to answer any questions or have a look at some setups that you have. But yeah, with that being said, have an amazing trading, well, it's coming up to the weekend now, but have an amazing trading week for next week. I hope you absolutely smash this trading week as well. And let's catch some pips. Let's go.